Assalamualaikum. I am Salina binti Aziz. We are from Group 3 and today we are going to present about our topic which is Malaysian Government Securities MGS. So let's move on to the next slide.
Assalamualaikum and greetings. Our group has been assigned for Malaysia Government Securities MGS, and I will be presenting about their background and also how it was built over the years. Initially, MGS issuance was intended to meet investment funds of Employment Provident Fund (EPF), local banks, and also insurance company. In the late 1970s and also early 1980s, MGS were issued to finance the public sector's development expenditure, but by the 1990s, it expanded into a broader range as government needed funding for their budget deficit. So, what exactly is MGS? It is a long-term bond issued by the government for financing the development expenditure. MGS is also a fixed coupon rate bearing bonds. The typical issuance size ranges from 1 billion to 4.5 billion ringgit depending on the government financing requirement, but the actual issuance size usually announced a week before the issuance date. The government is committed for continuously issuing 3-year, 5-year, 7-year, and also 10-year benchmark security for MGS.
Now, I will explain about the market participant involved when trading Malaysia Government Securities (MGS) and the respective roles. First is Malaysia Government Securities. Malaysia Government Securities (MGS) and MGII are traded by the various key market participants, each playing an important role in ensuring market efficiency and liquidity. The Government of Malaysia is the main issuer of MGS and MGII, and the securities are backed by the creditworthiness of the government, making them valuable instruments in the Malaysia financial market. Second is Bank Negara Malaysia (BNM), act as the government banker, financial advisor, and issuing authority by managing the issuance of government securities through competitive auction. It facilitates settlement through the rental system and continuously monitor market liquidity to ensure smooth and orderly market operation. Third is financial institution. Financial institution including commercial bank, Islamic bank, investment bank, and licensed bond dealer actively participate in the secondary market by buying and selling government securities, either for their own investment purpose or on behalf of client. Fourth is money broker. Money broker function as intermediaries in the over-the-counter (OTC) market by connecting buyer and seller of government bond. Money broker facilitate negotiate transaction, particularly for large-scale trade, and money broker do not take proprietary position in the securities trade. Fifth is Bursa Malaysia. Through Bursa Bond, provide the electronic trading platform (ETP) for the trading and reporting of fixed income securities, include government bond, which enhance market transparency and efficiency while ensuring compliance with market regulation. Last is investor. Investor play a crucial role in the government securities market, which with pension fund, insurance companies, mutual fund, and foreign investor being the main holder of MGS and MGII. Their demand help establish benchmark yield, contribute to market liquidity, and collectively sustain the operation of the government bond market.
Good morning everyone. For this section, I will explain how Malaysian Government Securities or MGS are traded. First, the Government of Malaysia issues MGS to raise funds for public spending and development projects. Then, Bank Negara Malaysia acts as the issuing agent by conducting auctions in the primary market. After that, financial institutions such as principal dealers purchase these securities. In the secondary market, MGS are traded through money brokers and Bursa Malaysia, allowing investors to buy and sell them. Finally, investors receive coupon payments and the principal amount at maturity. This process ensures liquidity, transparency, and confidence in the Malaysian bond market. Okay, for these slides, it provides an overview of the MGS trading process. The trading of MGS involves several key parties, including the Government of Malaysia, Bank Negara Malaysia, financial institutions, money brokers, and Bursa Malaysia. MGS are traded through a structured system that consists of two main markets, which are the primary market and the secondary market. The primary market focuses on issuing new securities, while the secondary market allows investors to trade existing MGS. This structure helps ensure efficient capitalizing for the government and strong market liquidity for investors. Okay, this slide explains the MGS trading process in more detail. First, the Government of Malaysia issues MGS as long-term financial instruments to finance government expenditure. These securities are considered low-risk investments and serve as benchmark instruments in the Malaysian bond market. Next, Bank Negara Malaysia manage the issuance of MGS through a competitive auction system in the primary market. This auction promotes transparency, efficiency, and accurate pricing. Financial institutions such as a commercial bank or investment banks actively participate in the secondary market. Their participation helps maintain market liquidity and manage interest rate risk. Money brokers facilitate secondary market trading by matching buyers and sellers. An active secondary market improves price discovery and increases investor confidence. Lastly, an efficient settlement system ensures timely coupon payment and principal repayment at maturity, which strengthens trust and support the sustainability of the MGS market.
One of the significant features of MGS is that they have minimal default risk because of backed by the government. It is ideal for investors that seek capital preservation because of MGS offers stable interest payments, making it easy to be traded on secondary market and enabling investors to enter for their funds before the bond's maturity date. Besides, MGS also has fixed rate coupon-bearing bonds with bullet repayment of principal upon maturity, while coupon payments are made semi-annually. So MGS are issued through a competitive auction on behalf of B&M. The coupon rate is set at the weighted average yield of successful bids, and successful bidders are identified based on the lowest yields offered, and it offers steady income for the investors, like stated in the slide. In addition, investors benefit from high market transparency in the MGS market since it minimizes uncertainty and enhances investment planning. They can plan their investment plans well in advance because the government pre-announced the annual auction calendar at year-end that details the schedule, tenure, and issuance method of MGS. This steady and transparent flow of information improves price discovery, reduces market volatility brought on by unforeseen issuances, and boosts investors' trust. Consequently, investors in the MGS market can make more prompt, disciplined, and informed investment decisions. That's all from
Next,
me.
I will explain significant feature of MGS that benefit the issuer. Cost of MGS have a low yield because they are almost risk-free investments. This enables the government to borrow funds at a lower cost as opposed to borrowing from companies or private individuals. High market demand MGS are in great demand in bank, insurance companies, pension funds, and Islamic institutions, thus allowing easy subscription and excellent investor confidence. Flexibility of MGS is ensured in various maturities such as short-term, medium-term, and long-term. Thus, financing is aligned with the fiscal plan of the government. MGS enables the government to raise funds at a relatively low cost while ensuring stable and predictable financing for fiscal planning. Secure and stable funding, payment of fixed coupon amounts enable to the governments to plan cash flows and deficit budgets more effectively. Credit support by the full faith and credit of the Government of Malaysia, which aims to reduce default risk and enhance the reputation of the government in the global marketplace. Active secondary. When there is a high level of liquidity within the secondary market, it becomes more attractive to investors, which allows an easy issuance of future MGS by the government. Aids in the development of its facilitate the creation of a benchmark yield curve, which in turn is very beneficial for the overall development of the capital market and enable the government to emerge as a principal issue. In conclusion, Malaysian Government Securities (MGS) are an important instrument in Malaysia's financial system and fiscal management. They provide a reliable source of financing for government expenditure and development projects, while offering investors a safe, government-guaranteed investment. An active MGS market support financial system stability, strengthen investor confidence and assist Bank Negara Malaysia in conducting open market operations. Therefore, effective management of MGS is essential to ensure sustainability government debt, economic stability and the continued growth of Malaysian financial markets and economy.